Did you know that you can supercharge your retirement savings with the Roth conversion? How exactly? Stick around, as in today's video we'll be talking about what a Roth conversion is, its benefits, as well as how you properly should do it. A Roth conversion might just be what you need to protect and grow your nest egg in the years to come. But let's take it back a little bit. What is a Roth conversion? A Roth conversion is the process of transferring assets from a traditional IRA or 401k to a Roth IRA. That means you need to have an IRA or 401k first to do a conversion. Now, while this process will have some immediate tax obligations, it also comes with very good benefits in the long run. So before you make the decision, you want to understand how the process works as well as its implications. Traditional retirement accounts come with several benefits, including being tax deductible. However, they are not without limitations. And depending on your situation now or in the future, these disadvantages can turn out to be huge challenges. So let's look at the top 3 limitations associated with traditional retirement accounts. Number 1 is contribution restrictions. Unfortunately, you can't contribute an infinite amount of money to your IRA. That's because there is an annual limit, which as of 2024 is $7,000 per year, or if you're 50 years or older, $8,000. This restriction applies to all IRAs, including Roth IRAs. However, for traditional IRAs, the contribution restrictions don't end there. If you're covered by a workplace retirement plan, such as 401k, your income level will dictate your ability to deduct your contributions on your tax returns. Basically, you won't be able to deduct anything if you earn more than $87,000 and can only claim partial deductions for income that's more than $77,000. There's also the matter of age restriction when it comes to contributions. Traditional IRAs don't allow you to make contributions at 72 years old. So even if you still have income flowing in from, let's say, your business, you can't put it into a retirement account to grow and accumulate. Number 2 is withdrawal restrictions. In addition to contribution rules, traditional retirement accounts also come with some not so pleasant withdrawal restrictions. For one, you can't withdraw money you contributed to your IRA before the age of 59 and a half, at least not without a penalty. If you do, you will have to pay a 10% early withdrawal penalty on top of the income taxes on the amount withdrawn. This basically means that if you have unexpected financial event like a medical emergency and have to dig into your retirement account, you will pay a hefty penalty for that. Once you hit the retirement age, you can start withdrawing from your retirement account penalty free, but let's say you still have some money flowing in and don't need more, which is the case with a good number of retirees. You can decide not to touch your account so that it can continue to compound. However, after you turn 72 years old, you must take required minimum distributions, also known as RMDs. Basically, these are mandatory and annual withdrawals that are calculated based on how much you have saved and your life expectancy. That means if you have accumulated quite a bit of money, you will be forced to take out thousands every year when you don't actually need that money. Number 3 is tax regulations. The final key limitation of traditional retirement accounts is the tax treatment associated with it. Remember, these plans are tax deferred, so while you will not pay taxes on contributions now, your withdrawals upon retirement will be treated as ordinary income. What does this actually mean? Once you start making withdrawals, your savings will be subjected to the times tax rate. This may or may not work against you. For example, higher RMDs will mean you fall under a higher tax bracket. There's also the issue of ever-changing tax laws, which can mean higher tax rates in the future. So the question now is it possible to work around these limitations? And if so, how? You can overcome these limitations and set yourself up for a more flexible and tax-efficient retirement plan by strategically undertaking a Roth conversion. Now you already know that a Roth conversion is simply moving funds from your traditional IRA or 401k to a Roth IRA. But what exactly are the benefits of a conversion? The benefits of a Roth conversion starts with number 1, no more income limitations. While a bigger check at the end of the month is good for your financial health, it may deny some retirement savings advantages. That's because beyond a certain income amount, you partially or fully lose tax deduction benefits on contributions, which is the whole selling point of traditional IRAs. Understandably, turn to a Roth IRA since it allows you to contribute after tax dollars that you can withdraw tax-free after retirement. Unfortunately, if you earn more than $161,000 in 2024, you're blocked from this option too. So a Roth conversion, however, doesn't have income limitations, and so you can make non-deductible contributions to your traditional IRA, which you can then convert to a Roth IRA. This loophole is why a Roth conversion is also called a backdoor Roth IRA. Number 2 is you can contribute for as long as you want. One of the best things about a Roth IRA is you can keep contributing even after you reach the age of 72. There are no age restrictions, as is the case with traditional IRAs. So as long as you have income flowing in, you can keep investing for the future or that of your beneficiaries. Number 3 is no required minimum distributions. If you don't need it, you don't have to withdraw it. This is one of the best things about a Roth conversion. There is no law requiring you to withdraw retirement income from your Roth IRA, which means you can avoid RMDs. Your retirement investments can stay invested, accumulating for as long as you want, and even pass it on to your children if that's part of your financial goals. RMDs are only required for beneficiaries who inherit Roth IRAs. This feature alone makes Roth conversions a great tool for estate planning. Number 4 is tax-free withdrawals. The best part about a Roth conversion is perhaps the tax treatment. A conversion will trigger a tax bill in the short term, as you will have to pay income taxes on the money you move to the Roth IRA. However, the long-term tax-free growth potential of a Roth IRA, coupled with tax-free withdrawal, can far outweigh these initial costs once you retire. So converting your retirement funds to a Roth IRA might actually maximize your savings and give you a more tax-efficient retirement income. Now to the big question. What is the best strategy to maximize your retirement savings through a Roth conversion? The trick to making the most savings when doing a Roth conversion is in the how. How you approach the process can and will determine what you spend in terms of taxes. Before we talk about the best approach, you want to understand how income tax is charged in the US. Basically, the federal government subjects your income to what's known as progressive tax rate. This rate ranges from 10% to as high as 37%. This means that the more you earn, the higher your tax bracket is going to be. Remember, money in your traditional retirement account is not taxed yet. And so when you transfer it to your Roth IRA, it will be subjected to income tax the same way your salary is taxed. This means if you have saved up, let's say $500,000 or even $1 million, transferring everything at once will have you dropping a huge chunk of money right at the IRS's doorstep. If you don't want to do that, the trick is to convert your retirement funds gradually. This not only ensures you to stay within a lower tax bracket, but you also spread out your tax burden over time. That is how you can maximize tax savings when doing a Roth conversion. The best thing is once funds move to your Roth IRA, you don't have to think about any taxes anymore. If you're looking to save on taxes in the future, especially if you see yourself moving up the tax bracket or desire greater flexibility and control over your savings, a Roth conversion might be the best strategy for you. A Roth IRA not only gives you tax-free growth and withdrawals, but it also allows you to secure your retirement and estate plan even more. You just have to know how to approach the Roth conversion process to save on costs, and that is doing it slowly over time instead of all at once. So have you done a Roth conversion? Share your experience in the comment section below. Also, if you enjoyed the video, give it a like and don't forget to subscribe for more retirement savings, tax planning, and personal finance tips and strategies, of course. Until next time, thanks for watching.